computer.
There you go.
All right. I'm very excited to have David Hoffman here. I've mentioned on my channel a number of times the Bankless podcast. I believe that's what you call it. The videos on YouTube, a lot of great guests on there. He has a lot of, sort of knows sort of an Ethereum expert, and also your video on the triple point asset Ethereum was also great last year. Anything else you want to say to introduce yourself, let people know why you're an expert?
Yeah, sure. So, and Bankless is also a newsletter, right? And so it's kind of this media studio. It's one part podcast, one part YouTube, one part newsletter, and then some degenerate tweeting going on. And then we also have like a Discord server where like the Bankless squad likes to hang out. And the way I kind of describe what Bankless is like, it's a media studio, but it's more of a political revolution. It's a political revolution disguised as a media studio. And so the content that we put out is all trying to create this revolution with crypto, right? And crypto is a very political piece of technology, right? There are values and ethos baked into these systems, right? And primarily the biggest value that I see is the sovereignty of the user, right? The individual over the collective. And, while collectivism has its place, I think, prioritizing the sovereign individual over the authoritarian state, I think is where cryptocurrency and blockchain technology and permissionless distributed ledgers like Bitcoin and Ethereum can really empower the individual over what I see as an increasingly authoritarian world. And so Bankless is about promoting the tools and education and possibility of this like user self-sovereign financial platform that we call Ethereum.
Great. And I do follow you on Twitter. I changed my Twitter description to mention that I follow few, but those I do follow are fucking legend. I don't know if I left the word fucking in, but anyways, I only follow 60 people. You're one of the people I follow at Trustless State. Appreciate your posts. And okay, so I've got a list of questions here to go through. First, Ethereum, your triple point asset thesis, which other people have said, and I don't know that you want to take credit for.
No, that I will actually take credit for. That was my creation.
Because I've heard Chris Berninsky talk about a similar sort of thing. Never. Anyways, the point is, I wanted to talk about Ethereum as a collateral, as a capital asset that earns interest. And one of the things that you talked about again in that triple point asset talk was ETH was the dominant collateral on Ethereum everywhere. And I feel like although it's growing in dollars, how much Ethereum is staked, and also in total Ethereum, but others are growing. We see this on MakerDao. USDC is now there's more USDC than Ethereum. And Uniswap, I'm not sure of the numbers, but I think, Ethereum no longer has to be on every single trade. So it looks like they're losing Ethereum itself is losing market share, although still growing. Does this affect your thesis at all?
Yeah, no, not at all. And actually there's definitely a very strong way to get it integrated right into the thesis. And we have to, remind ourselves that at the genesis block of Ethereum, there was only Ether, right? There was no other contracts. There were no applications. There were no other tokens. There was only Ether, right? And so as we are seeing some of like these first initial applications, you cited MakerDao and then also Uniswap, they also started with only Ether because that's of the assets, that's what they had available to them. There was only Ether, right? And so the fact that Ether is losing dominance to other ERC20 tokens like USDC or MKR or Lend or Synthetics, well, that just is a symptom of the growth of the Ethereum economy. And Ethereum as an economy is supposed to host other assets, right? Like if Ethereum isn't a blockchain that is supposed to serve Ether, Ether is an asset that is supposed to serve Ethereum, the blockchain. And so I'm totally okay with Ether losing market share in these applications because that's what Ethereum is supposed to do. Ethereum is supposed to produce an economy. And the size of the Ethereum economy ends up getting relayed back into the value of Ether through a number of different mechanisms. And one of them is proof of stake and one of them is EIP 1559. And with those two mechanisms, the size of the Ethereum economy ends up gets routed. The value of that gets routed back into Ether, the asset, at the end of the day. And so I would actually be very scared if there weren't other tokens being integrated into these applications, because that would signal that this economy platform isn't useful. And so I would hope to see Ether lose market share in some of these applications, because we want a diverse economy. We want an economy that does many things rather than a few things.
I like that answer. And this EIP 1559, I wonder if we can come up with a better name for that.
We definitely need a better name for that.
And for those who don't know, it's a proposal on Ethereum to have transaction fees paid in Ethereum to actually just burn the Ethereum. And that's great for many reasons we probably don't have to get into, but just for those who were like, what did he just say?
Yeah, right.
Yeah. I mean, it took me 6 months to remember 1559. I mean,
right.
Anyways, so the next thing, I wanted to talk a little bit about yearn.finance. And again, I applaud you for being one of the early shows to have Andre on. I think you had him on twice. And the first time you had him, it was like, it might have been his first or second interview.
It was his very first podcast. Yeah.
Okay. And I was like, what is this yearn thing? What is going on? And that your shows really helped. I mean, he's one of these guys you got to listen to. I think one of your shows I listened to twice because
I listened to them twice as well. Yeah. You're not alone.
The first time I was like, okay, now I think I know something. So now I'm ready to actually listen. So anyways, that's yearn finance. So yeah, people can go. I'm asking these questions also for my viewers. These are questions that I have about what's going on. This is not made for viewers per se. This is made for me getting answers. So some of this stuff may be a higher level, and Bankless has a lot of beginner materials. Go there and get yourself up to the point if you want to understand some of these questions. Anyways, so yearn finance came out with their Ethereum Vault, and vaults are where you lock in your tokens and earn interest. So I thought, wow, finally we can earn interest on Ethereum. This is exciting. I was like, great, I'm going to do it, or at least try it out. 3 days later, the thing was filled to the max. Like you couldn't get in anymore. I'm like, what is this? Legacy? You got to know the guy to know the guy. Although this, you don't have to know the guy. This is, you have to be ridiculously fast, which I'm generally against. It's usually a bad idea to rush. Anyways, why did it fill out? I think I heard Andre explain it and I didn't understand what he was saying. What were they afraid of? What do you know why it sort of
Yeah. So the Ether Vault, we call it the yETH Vault in the yearn system. And what that does is you deposit your Ether into yearn, and then yearn deposits that Ether into MakerDao, which then it draws DAI, it mints DAI debt against that Ether, and then it uses that DAI to farm in DeFi, right? It puts it into Curve, it puts it into DYDX. And so it's a very simple and automated way to get the value in your Ether unlocked in the form of stable coins and then farmed out in DeFi, right? And just like you said, there wasn't really a place to get yield on your Ether at the asset, right? Like that's kind of why a lot of DeFi tokens have gone like, 10x, 50x, and Ether is just on like a modest, 1.5x. Because like everything else is earning yield and Ether's not. And this is like the first opportunity for Ether to earn yield. And almost of all tokens on Ethereum, on all assets on Ethereum, everyone has Ether, right? Like almost by definition, because you need it to purchase the other tokens in the first place. And so, as a total addressable market, this Vault product applies to everyone on Ethereum, right? And so there's just insane demand for it. And so I think after 3 days, there was like 350 something thousand Ether, not dollars of Ether, 350,000 Ether deposited into the yETH Vault. And so they capped it because it was partly growing just too large, too fast. And when things grow too large, too fast in DeFi, like people start to get nervous, right? And also at the same time, I think there were some other limitations on it as well, such as like there's not enough DAI to print, like the DAI ran up against its ceiling because there's only so much DAI you can print with one collateral inside of MakerDao. And so the DAI that's backed by Ether hit its max. And so between there's too much ether being put into the vault and MakerDAO having a low DAI debt ceiling, they had to cap it. Now, I believe that DAI debt ceiling has been upped in Maker, and so more DAI can be minted from Ether now. And so now they are also working on just kind of doing a version 2 on the yearn side of things. They're kind of doing a version 2 of the yETH vault, which allows for things to be more efficient, strategies to be better. And I think that's rolling out in the next few days or so. And so it will be opened back up to anyone that wants to deposit ETH.
I don't know this isn't the next question on my list, but the interest rate on Ethereum, creating DAI with Ethereum was 0% for quite a while. And it went up to 2%. I can't believe I missed that. How was that not the day it went up? Anyways, do you remember when that happened? And was that related to the yearn.finance or raising the debt ceiling?
Yeah, so that's it's all related, right? Because yearn is such a consumer of DAI, but I wouldn't say it's directly related. There's been some big conversations in the MakerDAO community, from what I understand, is that there's all this yield going on in DeFi. Like all these other protocols are producing yield somehow, and their tokens are going up in price. And Maker and the MKR token wasn't really included in all of that. Even when DAI throughout the ecosystem is one of the main assets, which is a product of MakerDAO, the main assets to yield farm with, Maker didn't really get that upside. And maybe part of this is because of the Black Thursday or Black Tuesday crash, which ended up with some vaults becoming liquidated with paying back $0 in DAI for the collateral. So some people lost everything. And that was kind of just a function of just the congestion of the network at the time, and then and so they had to mint MKR to get back into solvency, right? And so MKR was diluted above and beyond the original 1 million MKR that was minted in the first place. It was like 1,005,000, right? And that kind of erased all of the gains, quote unquote, that the protocol had earned throughout the 2018, 2019 bear market. And so, MKR kind of was priced out of this DeFi movement, which is kind of frustrating because there's so much DAI now. We're at an all-time high in DAI supply on Ethereum, almost at 1 billion now. And all these different DeFi farms, these yield farming, the liquidity miners, are all using DAI, which is Maker's product. And so DAI has been above $1 for, ever since this yield farming thing has gone on. So for 6 months. And so when DAI is above $1, Maker lowers interest rates because clearly the demand for DAI is pushing it above $1. So they lower interest rates to encourage the minting of more DAI. But there's been just so much demand for DAI that DAI's been trading at $1.03 for forever, right? And so I think what's going on with the Maker team or the Maker governors is that they are deciding to add in a 2.5% interest rate, go from 0 to 2.5%, even though DAI is still above $1, because every other protocol is using their product and they're not being paid for it. And so they want to be paid for it. And so they're adding in a 2.5 interest rate to make sure that they are capturing some of what they think is their fair share, because everyone's using their product and they're kind of just giving it out for free. And so that 2.5 interest rate on the Ether, the Ether that backs DAI, is now in play. And so now MKR is actually starting to be burned again, which is kind of the whole point of MKR.
So now I see it here. We're currently at 2%. Is it going to 2.5 or is that?
Oh, maybe it's 2%. So each collateral has its own specific interest rate. And so I think the website that I like the most is daistats.com. And that's done by Mariano Conti. And there's a bunch of different, you are right. The Ether stability fee is 2%. The BAT stability fee, for example, is at 4%. USDC is at 4%. Wrapped Bitcoin is at 4%. And so, different interest rates per asset. And you're right, Ether is at 2%.
Okay. So, right. I've been watching the price of DAI. I understand that when it's high, they want to have lower interest rates. And it has sort of come down to 1 cent. And then Rune
Mm-hmm.
Now that was different. When he came on saying that he had this like an emergency Monday meeting to allow these other, I think it was CDI or whatever, but it sounded like, boy, the price is really coming down. They need to raise interest rates. I guess I'm trying to figure out what my question is here, which it's sort of, are they raising interest rates because there's a need to raise interest rates, or kind of what you're saying is they're raising interest rates because they can and they want to make some money, which I guess on the other hand, they have to hold the peg.
Mm-hmm.
So all of these things are interconnected, but I mean, you're sort of saying, well, it wasn't about to fall through the floor. That's not why they raised interest rates.
Right.
It wasn't because Yearn ran it up so much. It was just, we got to make some money here,
I mean, yearn is one of the many players that are causing this high DAI price. And like in comparison to a low DAI price, a high DAI price is preferable between the two because, well, I guess there's a balance between both sides. But like with a high DAI price, you get to mint more DAI. So right now there's 880 million DAI out there, and like it was below 100,000 DAI. So for like almost all of 2019, if not all of it, right? And so like the fact that DAI has skyrocketed in its market cap is really nice, and that's definitely a symptom of the high DAI price. Because if DAI is $1.03, you can mint 100 of them and then sell them for 103 USDC and pocket that $3 difference. Hopefully wait for the DAI price to come down and then pay back your debt and pocket that $3. Now it takes a long time to do that, and so you have to be patient as you wait for the DAI price to come down. But ultimately, people have been demanding DAI to get it used in DeFi. And the other side of the equation is that Maker needs to produce scarcity in MKR for the system to operate, right? And so there is when everyone is using DAI and MKR isn't generating revenue and the value of MKR isn't increasing, that's bad because that's poor risk management. The value of MKR is the backstop to the whole system. And so there needs to be burn pressure on MKR to make sure that the backstop is stronger and stronger and stronger. And so I think this, as just a rational risk reward perspective, this was a good move because now we can start burning MKR and start growing that backstop.
Okay. And I should have mentioned at the beginning for people listening, I'll put this agenda and links in the description. And just to give you a heads up here, so we just talked about ETH as a capital asset. We're going to talk about MakerDao. We're leading into that. Bitcoin as collateral, layer 2 scaling, and governance tokens. Strap in your seatbelt. Okay, so MakerDao, I want to skip to because we're sort of on it here. I just noticed this. So MakerDao, I've always loved the project. And I thought it was great a while ago. And then I was like, but how, it had 0% interest rates. I'm like, how is this ever going to justify its price? And then all of a sudden I look now,
right?
There's a great link at this makerburn.com/rundown. I'll put the link where, and I was like, wow, if you add up the annual fees in that page and you compare that to the market cap and you look at those fees as earnings, it's a dividend of over 5% right now.
Yeah.
Well, that's good. That's a pretty high. And I feel like these numbers are going up. I hate predicting, anything, but interest rates going up seems to be a thing here. And so not just on MakerDao, but, possibly in the economy or whatever. So all of us, and then MakerDao burning, hold on, let me look at my question so I don't ask two things at the same time. Okay, so the 5% dividend, you agree that I'm running these numbers correctly, and that is a way to think about it?
I haven't run the numbers myself, but that sounds about right. Yeah, it sounds like a reasonable number.
So then now they're going to start burning, and that I found here at makerburn.com. And if you click on the question mark, info here, it says, they're at a pace of, well, it went down. It's now 70,000 in DAI per day that they're going to take the DAI to buy MKR and burn it. And I'm like, so then I went to this Paprika. What is this? Coinpaprika.com. That has a thing with liquidity. I don't know how accurate this is and if you're familiar with this thing. And they show like the selling volume of of MKR it shows, well, and that went up now to 3 million. It was 2 million. I guess my question is this burning of whatever it might be, 70,000 a day, because is that going to start moving this market and relatively quickly? I feel like it would, in my theory. I'll let you talk before I go on and on. What do you think this is going to move the price, this burning that just started today?
Yeah, well, it's supposed to, right? Like that's the design of the whole system. And so the burning of MKR is supposed to make MKR more scarce, right? And so that's the intent of this. And so, anytime we burn MKR, there's less MKR on the market, right? And also remember, MKR is a governance token. And so when, the total supply of MKR goes from like 1 million to 900,000, if you were just holding your MKR in your wallet, all of a sudden you have 10% more say over the MakerDAO protocol, right? And so your equity ownership over the system goes up because MKR is being burned, because it's not your MKR that's being burned, it's other people's. In order to close out a vault and get your collateral back, you have to buy MKR off the secondary market and pay it back into the system. And so just as a natural consequence of the reduction in supply, price should go up, right? And this means, and what's interesting here is that because supply goes down, the revenue that the protocol is making is also proportionally more for you as well, right? And so that like 70,000 DAI that the protocol is currently receiving, if it burns 10% of MKR, well, then you have a claim on 10% more of that revenue, right? And so that starts to compound on itself. And then we have to kind of balance it out with like, well, there's market volatility, we're kind of tied to equities markets right now. Like MKR is tied to ETH is tied to Bitcoin, Bitcoin's tied to equity markets are tied to the dollar, the money printer. And so there's a big disconnect between like the actual rate of MKR burn and the actual MKR price. But if the system works as intended, which it has for like 3 years, the more MKR that is burned, the more scarce it should be, and the more the price should appreciate. And there's also the game that like, well, that's the technical protocol instantiated version of why number goes up. But then there's everyone else who's watching this data come in, and they're like, well, if everyone else is watching this data, then I'm going to buy it first because everyone else is seeing MKR get burned. And so I'm going to buy it because I'm seeing it become more scarce. And so there's like the secondary layer game on top of the protocol. It's like who's playing chicken with who's going to buy first or not. Or like no one, or maybe there just aren't that many people playing that game and price does nothing. Like who knows? But to answer your question more directly, the more MKR that gets burned, which is what is currently happening, the price, it's supposed to increase the price.
So I understand, right, theoretically with economics, less supply, higher price. But the question really is, well, this 70,000, is that like, well, in the long run, like if they only burned one a day, I don't think we'd expect the price. And if they burned 1 million a day, it would definitely go to the moon the next day. So where are we with 70,000? And I guess my question, and I don't know if you have insight on this, but my feeling is that a lot of the volume that we see for trade is a lot of like traders and market makers who just sort of are trading. So they buy it and they're holding it and then they sell it and it goes back and forth. So this, where it's burning, actually comes out. So how much is that, the price stays steady by some much smaller amount than the market cap, and looking at this coin paprika saying that how much liquidity there is there a math where we can look at, well, if the liquidity is 3 million today, granted it was 2 million yesterday, and we're going to be burning 70,000 a day, does that mean it's, you can do 3 million minus 70 per day and it's going to be, and so we know that when it gets to a certain thing and then the price goes up, is there some sort of math way to predict this at all?
Yeah. So like when you purchase MKR off the secondary market, like you have the secondary market traders, like the buyers and the sellers that are always participating in the market and they're generating the volume. And then somebody wants to come and close out their vault. So they go to the secondary market and then they become a buyer, a momentary buyer, and then they burn that MKR. And that's the really crucial thing, is the people that are burning MKRs are never sellers. They are momentary buyers, but they never become sellers. And so there's always every vault that gets closed, every, you know, loan that gets repaid, there's always a momentary buyer that never actually turns into a seller at a later point in time, right? And so as the protocol grows, there's more and more instances of people being a one-time buyer and a never seller, right? Because they delete the MKR. And so oh, and if you are looking at the MKR burn, the website just updated to its projections to, yeah, you're right. 5% of remaining MKR is going to be burned in a 1-year period. And so the website's at these current rates of interest rate and DAI supply, the Maker protocol is going to burn 50,000 MKR a year. And so that's 5% of the total supply. And so like you can kind of view that as 5% interest. But you could also, we should remind ourselves that, you know, that's 5%, but that 5% compounds, because if we burn 5% this year, then we also burn 5% next year, then there was already 5% off of the market, right? And so like it's starting to compound on itself as to how much remaining share gets burned. Because again, there's the cohort of people who are the never sellers because they're burning their MKR. And it's also worth noting that like the interest rates, at least we don't really have too much data, historical data of MKR interest rates over time, but during the 2018, 2019 bear market, like interest rates got as high as 20% on Ether. And right now we're just at 2%. And also there's also way more assets inside of MakerDAO. And so maybe if we just like tripled the interest rates going from 2% to 6%, which is far lower than like the cap that we saw way back when, like that goes from 50,000 MKR burned a year to 150,000 burned a year. And remember, there's only a little bit more than 1 million MKR. And so what happens when people see 150,000 MKR getting burned a year, which is 15% of the total supply? That's bullish. That's what bullishness is.
Yeah, I seem to go with a MakerDAO. I seem to go between, wow, this thing's going to go up a lot, which is where I am now, to, oh my God, I don't think this thing is going to work. I'm panicking. And it's funny, but it remains. But anyway, so, okay, that's great. So my next topic here is Bitcoin as collateral. I think the two players appear to be WBTC and RENbtc. This tbtc, everyone seems to love, but it can't seem to get off the ground. Are there any other players, and how are they getting yield? Do you know?
Yeah, so a really good website for this is btc.onethereum.com, and that can show you the supply of all the various different versions of tokenized Bitcoin on Ethereum. I do agree with you that WBTC is probably here to stay. It's honestly probably the safest because there's no protocol risk, right? You just give up your Bitcoin to a custodian, and the custodian issues you a redemption share on the Ethereum network. And so all of that technology we know how to do. And if you are okay with using the legal system to protect your ownership over Bitcoin, then that's fine. On the opposite end of the spectrum is what tbtc is, which is hopefully a version of a protocol that spans between Bitcoin and Ethereum that allows you to have permissionless redemption and tokenization of Bitcoin, right? RENbtc is also in that camp. And they've been rewarded for getting out the door early. They are also a protocol to get Bitcoin from Bitcoin to Ethereum, but there is a security gap that makes them closer to a custodian. So they're trying to plug that gap. They're trying to fill that hole, but they do have the private keys, and so they could run off with your Bitcoin. And so the reason why tbtc is kind of like in favor is because it's made by this guy named Matt Luongo, who is a Bitcoiner, right? He believes in Ethereum, the technology, but in Bitcoin, the money. And so like when it comes to like monetary maximalism, Matt Luongo is like a Bitcoin maximalist. And so why I'm particularly bullish on tbtc is because it fills the need of Bitcoin maximalists who don't want to trust anyone. If there's ever going to be an implementation of Bitcoin on Ethereum that suits Bitcoiners, it's going to be tbtc. However, again, WBTC is also safer. And then to your second question with like, how do people get yield on this? Right now, it seems to be that WBTC is the only version of tokenized Bitcoin that you can use as collateral in these applications. So you can use WBTC in MakerDao, and then you can mint DAI, just like the yETH Vault. You can mint DAI against it and use that DAI to farm, and then that's the yield. And then you can also estimate WBTC to Aave and compound. And then people who are borrowing Bitcoin for whatever purposes are paying you an interest rate. And so those are the main ways that you can get yield on your Bitcoin.
I saw the interest rates look really low.
Yeah.
And I'm wondering if, but using it in MakerDao to get DAI, I could see, you can make decent money with that.
Mm-hmm.
Is that the bet? Like that, I don't know, what the latest yield is on DAI, but it's easily whatever, that's always the highest. Are there any other Bitcoin places where you've seen high interest rates? Because I know it's on compound and it probably pays 4%. Is there anywhere else where there's a high yield other than minting DAI?
Yeah, the other place would be the WBTC Ether Uniswap pair, which is the current yield farm for the Uni token. And so you can submit one part WBTC, one part Ether as liquidity into Uniswap, and then you get rewarded in the Uni token above and beyond the fees that you get for just supplying liquidity.
By the way, if I was going to load Uniswap, I can never figure out the math on Uniswap. Not that I can figure out math in most places, but when you want to fill the pool, does it just set you with the regular price? And I wouldn't have to worry about volume. I assume the amount, like in other words, I'm not going to overwhelm with my collateral. If it just gives me a price on ETH, Bitcoin, WBTC, and I just give it its thing, I'm probably getting a decent price, and now I'm providing liquidity. Is that sort of how it works?
So there's two things to do on Uniswap. One is to trade. And yeah, so like you say, like you pull up the two assets that you want to trade. You have one asset and you want the other asset. And then you put in how much asset you want to sell, or vice versa, how much of the asset you want to buy. And it will just produce the number that is on the other side of the equation. And so there's no negotiating, there's no orders, there's not an order book, there's no limit orders. It's just like, okay, I want this. And then the protocol will give you, okay, well, therefore you have to give me this, right? Or you can say, I want to give you this. And then the protocol says, well, in that case, I will give you this, right? There's just a number. And that's just swapping on Uniswap. If you want to be a liquidity provider, which means you're adding both assets to the pool, you need to match both assets in terms of US dollar value in the pool. And again, it will do this for you. It says, okay, you want to provide liquidity into this particular pool. You need to provide some ratio of both of these tokens. And it'll if you put in one number, it'll autofill the other number.
I like that. Uniswap is interesting, but I always feel like I never want to provide liquidity because I don't like this thing where if one token goes down or sort of becomes a shitcoin, you just get a lot of that token. And I'm like, that scares me all the time. But, I feel like WBTC against ETH isn't bad because if BTC goes down, I get more ETH, which I seem to never mind. And if BTC does well, then wait a second. No, if Ethereum does well, I'm getting more Bitcoin, but I sort of don't have much Bitcoin and I'm earning these fees against it. And it probably goes up as well, but not as much as ETH. I feel like that's a trade that maybe I could get involved in Uniswap.
You being a Uniswap liquidity provider is really good for when you are bullish on both assets, right? And so I wouldn't really want to be a liquidity provider for the Uniswap Ether to DAI pair because one part is denominated in dollars and one part's denominated in ETH. And if ETH moons, which I'm totally thinking that it will at some point, well, then I'll be left with more dollars, which I'll have more dollars, so I'll have made more money, but I wouldn't have made as much money if I had just gone in all on Ether. Right. And so if you are providing liquidity to Uniswap, you want to provide liquidity in two assets that you are bullish relatively equally on.
And supposedly the fees, though, have made up for even ones that diverge. Like I've heard that over, I don't know what period of time, ETH versus DAI, and you still made money, but I guess they would have made more had they left it in ETH. Right. I don't know. But okay. So what is it? Okay, so that was interesting. And I mentioned one thing about RENbtc because I've been a fan of it because I'm all about decentralization. And I feel like I understand Ren's model for being decentralized. It's all of these nodes. operating independently, profitably. And I'm like, well, that really can work. But obviously, they're not there today. And I also have concerns of whether they're moving fast enough. Like I have my issues and concerns, but I do believe that, you know, I'm in it for the decentralization, and I'm willing to give time because I understand you can't be day one with this thing the way it is. So I'm hopeful, but you know, that is key. Okay, layer 2 scaling. This is you know, hard to wrap anyone to wrap their head around, I would imagine. But anyways, so first, a quick question. There's optimistic Ethereum. Is that a version of what people also call optimistic rollup? Or are those two different things? This optimistic Ethereum, what Uniswap and SNX are working on to use. And then there was an article here about optimistic rollup versus EK rollups. And I'm like, are they the same? Do you know what I'm
Yeah, so I think what people are saying when they say optimistic Ethereum is a version of Ethereum, a future possible version of Ethereum that is very optimistic rollup heavy, a version of Ethereum that uses a lot of optimistic rollups. And optimistic rollups are just one of a few possible schemes of rollups that can help scale Ethereum. And from what I'm seeing from the people that I trust that know more than me is that specifically the optimistic version of rollups is the home run, the thing that kind of hits all the check boxes.
So, I mean, that's what I was thinking, but then this article came out from the Starkwave, which has the ZK rollups. I feel like they were sort of coming out in defense of theirs, and it had some points. So we saw, you know, you might have seen the SNX, what's his name? Kane?
Kane? Yeah, they are really pioneering the usage of optimism.
Well, he brought back his tweet when he said, you know, optimistic Ethereum is the solution, that whatever they're working on is the best and nothing's even close, and what they're doing is going to melt your face. And then everyone was mad about all of their other implementations. Then he said, oh, I was just talking about other layer ones have no chance. There's other scaling things on Ethereum. I don't know if he was dialing it back because he was getting shit or if that's really what he meant. And Uniswap also moving to that, this version of optimistic rollups, I guess. So I guess first on that, do you have any sense of when these things will launch? And will it be like Uniswap? So Uniswap to me is like Uniswap on a level 2 that works. We're like, that's another bull run as far as I'm concerned. So what is that going to look just like the current layer 2, but it's just going to be faster with lower fees? And that the move from version 1 to version 2 was so beautiful. I mean, everybody just moved all their money to this new one. Do you think it will be that easy? You know, I'm trying to gauge my excitement for this layer 2.
Yeah. So I don't know. But from what I've gathered is that you getting on to when Uniswap uses optimism and when Synthetics uses optimism, I know that getting onto these platforms should be trivially easy. And just like how you use Uniswap, you can probably use the optimistic version of Uniswap just like that. Probably no difference. What's going to present a new obstacle is getting off of the L2. It's because you are going somewhere that is separated from the main chain, and getting there is easier than coming back. And so coming back, there are delay periods where we make sure that everything that happened while you were on the L2 did happen according to the rules of what the L2 said. And there's what's called the challenge period, where when you say okay, I want to go back to the main L1, you go into a challenge period, which means that you are just in this waiting room for people to challenge you on anything. And then if no one challenges you, then you can get off. But that waiting period can be a week. And so it's going to be interesting with people who try and kind of obfuscate this waiting period. The ETH Global event, which is, I can't remember what it's called, but it's actually, let me pull that up because I should have that in my head. But I know there's a team that is working on this. ETH Online, which is going on right now, ethonline.org. I know there's a team that's working on like trying to figure out how to have speedy withdrawals from optimistic L2. And there's a number of different ways that we can solve this. Like you can charge a small fee, or you can have some hoster liquidity providers providing liquidity on one side versus another. And so there's a number of different ways to kind of mitigate this time period. But to answer your question, I think we're just going to have to wait and see. Part of your question was, when are we going to see some of this stuff roll out? I'm pretty sure Synthetics and Uniswap are going to be the first ones to push this forward. I know Synthetics is pretty heavily involved with the optimistic team, going back and forth and working as a team to get this rolling. I think that's going to be the number one. And so my gut feeling on this would be sometime mid to end November.
Okay. And then, so it will be like a version 3. In other words, if I'm a liquidity provider on V2, this doesn't affect me, and unless, well, I either leave it there, but I have to be on version 3, I would have to put new money in version 3 or take out of V2 and put it into this version 3, right? It's not going to be version 2, all the capital that's there, sort of flip a switch and it, well, maybe they'll make it.
You will have to do something.
I'll have to do something to allow that. Yes,
you'll have to do something. And whether it's Uniswap version 3 or just Uniswap version 2 that's on optimistic, that remains to be seen. Because I do think that version 3 of Uniswap is coming, which will probably be on Optimism and have a boatload more features as well.
Hold on. You just said November. I forgot that it's October. You think in a month it's going to be launching?
So some versions of optimistic. So like the way that this works is that, we can have optimism and people can use the optimism's team's version of optimism, or you can make your own, right? You can take that code and you can spin up your own version of an optimistic L2 and you can use that one, right? And so different teams and protocols, I think, will either opt into the main canonical optimism version of optimism or spin up their own. And it's to whatever one that they want to suit their needs, however they want to do that.
Okay, well, that's exciting. Well, I'm dying to ask about the Unity token, but let's stick with layer 2 while we're here. So this article about, so then there's the ZK roll up that sounds like it's more, it can allow you to do some things. They put out a big article about how, I guess it won't have this delay of getting your money out issue, and it has some advantages. I don't know. People working on that. Do you have an opinion on just Starkwave and the ZK rollup options and how that might do?
Yeah, now we're at kind of like the edge of my knowledge of the L2s on Ethereum, so I don't really have any more to say on that one, unfortunately.
Okay, and what about XDAI? I've heard people think that's really cool, and I'm like, well, where does that? And I asked somebody, and they're like, oh, that's for different uses, and I'm like, okay, well, what use? Like, where does XDAI fit into this?
Yeah, XDAI is a side chain to Ethereum that uses DAI as the gas instead of Ether, right? And so it's a great way, because like if we want to swap DAI between each other, we also need Ether in our accounts to do that, right? Because that's how we pay for gas on the Ethereum L1. But XDAI is a side chain to Ethereum that you can take your DAI on the main Ethereum chain, send it over to the XDAI network, and on the XDAI network, DAI is the gas, right? And so you pay for network fees with DAI. And it's also a proof of authority sidechain. Well, it was, and now I think now it's a proof of stake sidechain, I think, where you stake your DAI and then you run the node, process the transactions, and then get fees denominated in DAI. But it's much more centralized than the Ethereum main chain, and it uses less strong security assumptions. It's just less decentralized, but it's super wicked fast, right? And so you can send DAI for a fraction, a thousandth of a penny, and it's basically instant. It's Venmo style transactions, and then it's just one transaction away back onto the Ethereum main chain. And there's also other things you can do on it as well. So POAP, which is the proof of attendance protocol, they issue tokens for people who participated in some event. And so it's kind of a way to like gain clout. So you can show all your POAP badges, like your Gotta Catch 'em All Pokemon badges that Ash Ketchum has. And you say, like, yeah, I was at ETH Denver 2019. I also was part of the phase 0 like testnet, like all of these things that you can do. You'll get rewarded for a POAP. And POAP is issuing their tokens on XDAI because it's more scalable, right? They can issue people to their Ethereum address on the XDAI network, which is, by the way, is literally the same address on XDAI as it is on your Ethereum address. So if your private keys work on Ethereum, they work for the same address on XDAI, right? So same wallets, just like two universes. And so they can send you your POAP tokens instead of having to do it on Ethereum and they pay like thousands of dollars of gas. They just have to do it on the XDAI network and they only pay a small transaction fee in DAI and it happens instantaneously.
Well, we'll have, you know, for me, I think I'm going to have to wait for all this stuff to launch before I can.
Oh, XDAI is launched. XDAI is over a couple of years old.
Well, popular DeFi applications launched on layer 2. That's sort of, you know, the key. You know what? So XDAI is launched. It's working. People seem excited about it, but our big application is going to use that one. You know. Okay, so you know, just after I made a video about how I don't like governance tokens, you know, Uni comes out with one, and I love Uniswap, and this Wi-Fi looks interesting, and I'm like, you know, my videos often are not evergreen, but so the Uni token, I love Uniswap, but I understand it as a decentralized exchange. I'm like, so what does this Uni token do? What can you do with the governance if you have a immutable exchange? Like, what does it do?
Yeah, that's actually a question that I've been thinking a lot about lately too. Everyone's really hyped on the token and everyone assumes it's going to have a full suite of governance features in version 3 of Uniswap. As it relates to Uniswap version 2, from what I hear, there is a 0.05% exchange fee that's turned off for Uniswap v2 exchanges. Now my question is how did the Uniswap token come to be the token that collects those fees for Uniswap v2? Because I thought Uniswap v2 was this totally robotic, totally decentralized protocol. So I'm actually not sure how those things got connected.
Did you say, what was that about turns off 0.5? What was that? Yeah.
So from what I hear, the governance token holders, that the Uni token holders can vote to turn on a 0.5% fee on all Uniswap v2 exchanges, which is interesting. I don't know how the exchanges got linked to the token. I'm curious.
In other words, something that could be voted is that a fee could be extracted from all trades on V2. And then the question is, if version 2 is something that launched that's immutable, how are you able to vote to change it unless that was built before the token was launched? So.
Right. And there must have been some way to connect. I don't know, actually. I should be more educated about this.
And then version 3, the idea is, so they're building it new and they can build in functions on the version 3 that they're working on that Uniswap token will have.
Can govern, right? Yeah. And so there's a bunch of different parameters, like, you know, do we increase, what should the fee be? Should we ever change the fee? What tokens should we include? How do we want to route orders? There's a bunch of different ways that the governance token can elect to have a more minute changes on different Uniswap exchanges.
One of the things I love about Uniswap is because it had no token and no governance. And I feel like that's one of the reasons it wins. It's not extracting any money. All the money goes to those who provide the liquidity, you know, and that's sort of what makes it a winner. And now are they getting sucked in? Has Hayden, you know, been sucked in by the investors, and now they're going to start extracting, and then that gives an opportunity for someone else to come and take over, you know, are you?
Yeah. Yeah. I mean, it's an interesting question and an interesting conversation. And I could hypothesize to the end of the day as to the different paths forward, but I think the best thing to do is just kind of wait and see what happens.
Yeah, and there's something to be said for extracting some money so that you have a big team and keep moving. Because although version 2 can run forever, like we might not want version 2 forever.
Right.
And how do you keep getting normal people to build something that supplies now? This thing's bigger than Coinbase. And it's like, no one's going to get paid for working on it, so it does make sense. Now, the Wi-Fi token, does that currently, I heard something, they have a treasury. How does the Wi-Fi either collect money or pay out a dividend? And if so, from what, how much?
Yeah. So the Wi-Fi token pays out a dividend if you are participating in governance. And that's a very easy thing to do. There's a very simple web page. I think it's gov.yearn.finance, I think is the link. And you deposit your Wi-Fi into the governance staking contract, and then you can vote on proposals. And then when you vote on proposals, your Wi-Fi gets locked for, I think, 3 days. And during those 3 days, you are earning dividends. And you will earn dividends in YUSD, which is like the meta token of the Curve system. And so it's an interest-bearing USD coin, kind of aggressive in its yield. And I think the dividend is relatively low comparison to other DeFi things. I think it's like 3 to 4%, but that can change based on governance, and that's paid out of the treasury, right? And so every single product from yearn, you put your assets into the vaults go and seek yield. The vaults claim 0.5% of the yield it produces, and then on withdrawal, it takes 5% of the yield it produces, and then on withdrawal, it charges a 0.5% fee. And that's how the treasury gets filled. Now that the treasury is full, the governors have elected to pay out people that actually use their Wi-Fi to govern, and pays them out in dividends for people that have voted.
Is there a place that shows that how much it's paying out? Like, or do you have to own the token to?
There is a website. I don't know what it is off the top of my head.
All right, let me get this.
Let me see if I can go ask a friend.
All right. So I don't know, but when Andre talks, he's like, well, I don't know why it would have any value. I don't know why people are buying it. I can understand. I don't know why it's so high, or when it was at whatever the high was on the thing. But if it's paying a dividend, I can see why it should have value. Do you know why is he saying he doesn't know why it has any value? And but I also thought that, I thought at first it wasn't paying any kind of a dividend. Is that new, or?
Yeah, so first it was charging fees and it wasn't paying a dividend. And then the fees came in, and then it did start paying a dividend because the treasury grew sufficiently large that we could start to pay out interest to the governors, right? Why Andre is saying that he doesn't think the token should have value, I think that's a little game that he's playing. He knows when he minted the token what tokens do on Ethereum. Like, they go up in price, right? He knows this. And so I think it's a little bit of OPSEC and maybe some legal protection, where he just said, like, I made this token because I wanted to hand it out to my friends who I thought could be good stewards of the protocol. And I think he's more or less kind of taking like the Satoshi route, where he says he kind of like is giving ownership over the system to the community in this very neutral way. And I think him communicating that he doesn't think the token has value kind of adds to that. I think that's what his deal is. But I think on the inside, he might be saying something different.
Okay. Yeah, because I'm starting to think maybe that does make sense. And another thing, I didn't have it on my list of questions here, but when he mentioned his stable credit, it looked really interesting to me. And it sounded like, the way he was talking about it was going to launch tomorrow. And that was weeks ago. And then I haven't really heard much about it. Have you heard anything about it? Is that still coming?
Unfortunately, I have also not heard much about it. Yeah.
Maybe they ran into a bug. That was all my questions.
All right. Happy to answer them.
Anything to add? Anything you want to promote before we sign off?
Yeah, actually, on October 14th, I'm giving a talk at the CoinDesk Invest Ethereum Economy Conference. Pretty exciting to see that CoinDesk is starting to get into Ethereum. So I'm doing a talk on the triple point asset thesis. And so if you are interested in that, you can watch my talk there.
Sorry, where do I see that? And is that live and you'll also be able to see it later?
Yeah. On October 14th. And yes, the CoinDesk Invest Ethereum event.
Okay. Great. Well, thank you very much. And
cool.
Very helpful.
Thanks, Dave.